Client paid you today, but should you record it as revenue? Someone pays you today. The money hits your account. It feels like revenue, but is it? This simple question confuses freelancers, small business owners, and accounting beginners all the time. In this video, I will explain when money becomes revenue, why timing matters, and how to think about it clearly. No jargon, no tools. By the end, you will know exactly how to answer this in real life. Recording revenue isn't only about totals, it's about when those numbers show up. Two businesses can earn the same money and still look very different just because of timing. Get the timing right, and your reports make sense, and get it wrong, and everything feels confusing. Many people think cash and revenue are the same. Sometimes that works, but in real life, especially with services, it breaks. It's not a careless mistake, it's one simple idea most people never learn. Once you see it, you will notice it everywhere. Revenue is about earning, not just getting paid. Cash shows when money moves. Sometimes the dates match, often they don't. Understanding this difference is the key to everything else. Forget memorizing rules. Just ask, what did the client get today? If the answer is everything, you can record revenue. If it's not yet or partly, the timing changes. A client pays today, but the work hasn't started. You got cash, but nothing has been delivered. This payment is an obligation, not earned revenue. Recording it too early overstates your performance. If you finish the work before getting paid, the value is already delivered. Revenue is tied to completion, not the payment date. This is why timing matters more than cash in the bank. Many projects don't finish in one go, they spend weeks or months. In these cases, revenue is recorded as work is delivered, not when the final payment arrives. Define what delivered means at each stage and stick to it consistently. Cash flows Cash flow shows liquidity, revenue shows performance. Mixing them up leads to mistakes. Keeping them separate gives a clear picture of your business. Why students and SMBs struggle? This feels tricky because business is messy. Payments can come early, late, or in parts. Work often overlaps periods. The goal isn't perfection, it's understanding the logic well, enough to make consistent, explainable decisions. You don't need complicated systems. This simple four-step framework works in almost any situation. Identify what was delivered, match delivery to timing, separate cash from earning, record consistently, follow it, and you will avoid the most common mistakes even when things get busy. Pause the video and think using the provided framework. Client pays today. Work starts next month. Revenue today, yes or no? Drop your answer in the comments. If you take away just one thing, money moving is not value delivered. Keep them separate. Apply the logic consistently and your understanding will grow as scenario get more complex. This video wasn't about rules, it was about thinking clearly. Once you understand the principle, you can adapt it to many real situations. If this video helped you, subscribe for more practical financial tips coming soon. Thank you very much.